Hello and welcome back to our weekly market recap. I'm with Rich.
Hello, everyone.
And I'm Knight. Let's get to it. So this past week, we saw a rebound in the markets up 2.76%, which means we're still up year to date 4.94%. Now this week, we saw a massive rebound from the past 2 week sell-off, specifically in tech. So the sell-off has stopped and we've seen a rotation now from value back into growth. And really, there's three main storylines for this week. Risk back on. So institutional investors, retail investors wanting to expose themselves back to risk, which has been a reversal of what we've seen the past 3 weeks. And then the other piece, we finally had the stimulus signed in and we saw pump in the market from that, and some news on COVID and the fact that Biden addressed the nation saying we want to get our vaccines out to everyone May 1st. All of that playing in some positive news into the market. So I'm going to share and let's go over in depth which days. So as we can see, we opened up on a pretty volatile day Monday. We actually saw a continued sell-off. So the same pattern that we had been seeing continued. And then we got to the low of the week on Monday. It closed. And then Tuesday, like I said, we just saw this complete reversal. And really what we think, or at least a huge part of it, is this sell-off that we've seen in tech has really come from the institutional side. So these large investors, institutional investors, basically saying, oh, we want to get our clients out of tech and into value. Well, what did that do? For the past 3 weeks, growth has just been selling off constantly. And what happened on Monday, everyone's saying, wow, all these growth stocks, Tesla's now at 550 a share. It was at 900. Maybe now it's actually better to invest in some of these growth. And so we saw some of that really helping to pump up the market. And then as Rich, mentioned, we had the vaccine news and the stimulus, and we can see the stimulus helped pump us on Tuesday, vaccine news really positive on Thursday. And then Friday, we did have a little bit of a mixed bag again. So Rich, what have you seen specifically around the vaccines that is important for you?
Well, one is it looks as if about 10% of the country has been vaccinated. We also have, just from the numbers, between 10 and 20% of the population has been exposed to COVID-19. So we're now looking at a guesstimate of something around 20 to a third of the population having some type of antibodies, either through vaccine or through exposure to COVID. So that's all very positive. And on top of it, President Biden is now pushing to get as much vaccine out as possible so that everybody, all adults 16 and over, can be vaccinated or are eligible to be vaccinated starting May 1st. So that's a big push. As I see it, it really sets us up for the fall to get back into a more normal season. We're going to be seeing a lot of activity in the summer, probably more opening up on the leisure side, amusement parks, vacation places, all that, restaurants, et cetera, opening up. And we're looking at then in the fall, schools opening up. So we're going to get back to something closer to normal. And at least this is what the market seemed to be indicating.
Well, there's a couple of interesting points. One, I think it's amazing. I think when Biden said 100 million doses in 100 days, how many people actually believed that it was going to happen? Now at this trajectory, we're looking at 100 million doses in 75 days. So we're actually doing better than was initially projected, which a lot of people said there's no way we could get to 100 million vaccines in the first 100 days. But again, we're trajectory on that. But surprising that the US has been so much better than Europe and other areas. And I think one of the things that's interesting is the struggle that we've seen throughout Europe in the fact that they haven't been able to distribute vaccines in the same way. And two, the fact of, I think we're going to see domestic travel, everything like that come back pretty dramatically. But I don't know what we're going to do on the international sphere, and how are we going to address COVID among nations. And so I'm not sure. I think that is the big future fear for where we could see some headwinds in the market. But domestically, I think it's a great place. I think we're going to be, back up. I think May 1st. Again, my initial reaction was, wow, that seems pretty soon. That seems like an aggressive target to hit. I don't know if we can hit it, but I felt the same way about the 100 million vaccines, and we're going to beat that. So who knows? We might even be sooner. And then the other big news from the week, stimulus. Now, we've known about this for a while. In fact, if you look, isn't it amazing how politics works? If you look back at our video in January, we literally said, oh, Biden signed an executive order saying that he was going to extend the benefits to the middle of March. Well, that means that we're probably going to see the next stimulus in the middle of March. And at that time, our thought was, well, man, wouldn't it be nice if we could get it sooner than mid-March? Yeah, it would have been nice. But of course, politics, again, at the last minute comes in, and of course, mid-March, just like we said. So 2 months ago, we saw it coming. This is the time, again, just in time for all the benefits to be extended further. But overall, I think it'll be interesting to see if we need another round of stimulus after this, because I think there's a lot of evidence on both sides saying, I think the Democrats are maybe expecting we'll get another stimulus, maybe even through the infrastructure bill, try and put some stimulus that way. And then, on the other side, if we really get vaccines and, somehow get to herd immunity, maybe by the end of the summer, I don't know if we'll need another stimulus bill, and that could have its own implications. One thing that Rich, I'm interested to hear your perspective on. Is this stimulus inflationary or deflationary? Because I've now heard some good arguments on both. So you have the one side saying it's inflationary. We're pumping all this money into the economy. How could it not be inflationary? Now, the deflationary argument, which again, I'm not sure I believe in, but they say, well, the unemployment benefits are so good that it's actually, people are less likely to go back to work, and thus that actually creates a downward pressure on prices, which is true. The less people who are in the workforce, it actually is a deflationary practice. And the last, evidence, the unemployment rate is very tricky to follow, because if you just use U3, which is the unemployment rate that we look at, it's not measuring people who either stopped looking for work or those sort of bits. If you include that, some of the projections say we still have about 12 million people who aren't working, including that, which I think could be a deflationary pressure. So Rich, what are your thoughts? Inflationary, deflationary?
Well, I think it is inflationary in general, but we have seen that sometimes you can have huge amount of fiscal spending, deficit spending, huge debt, and it does not lead to inflation. We've witnessed this with the Japanese economy. And my belief is it may be too early to tell whether this is going to lead to a great deal of inflation in the future or moderate. I think for the next 6 months to a year, it's not going to be very inflationary. Where we go after that, I'm not sure. And some of it has to do with the number of baby boomers who are retiring each year. The other part is exactly what Knight has been bringing up about that we have a large group of people who are in the right age group to be in the workforce, but for various reasons are not, some of which was there's a large group of women who left the workforce to care for either elderly relatives or children because of the pandemic.
Yeah, and obviously the technology advances that we've had, deflationary pressure. So I don't know. I will say this. pay attention, because next month we're going to have a lot of people coming out of the woodwork saying inflation is here, inflation is here. And it's all going to be smoke and mirrors. And the reason why is because year over year inflation is going to look really drastic for 2 months. And it's going to be during March, April, and maybe a little bit of May. And those year over year, it's going to be over 2%. It's probably going to be somewhere like 2.3, 2.5. And you're going to hear some people saying, see, we knew it, inflation's coming. But what they don't understand is we actually hit a huge dip in inflation in March, April, and May of last year. So if you look,
because of the lockdown.
exactly, because of the lockdown. So if you compare it on a year over year basis, it's going to look like, oh my God, inflation is crazy. But if you look over over month, or if we didn't have that dip down, then it would look like just a normal 1.6%, inflation rate, which is basically what we've been experiencing for so long. So we are going to see temporary higher inflation, but don't be fooled by that. Don't give in to all the headlines that are next month that are going to say it, because we know they're coming.
Good point, Knight. I'm glad you brought that up.
Now, well, overall, we appreciate you guys sticking with us. It was a good week in the market. Again, we've been seeing wild swings, so risk on, risk off, and each day it feels like it's a different move. But we'll be here telling you our thoughts next week. Give us a like, subscribe to our YouTube channel. As always, we're here to support you. Your money's here to support you. We'll see you again next week.